Hello everyone, thank you for joining us today and welcome to this educational presentation of my premier pullback strategy in action. Now the strategy I'm going to be sharing with you today actually is only about a year old, but has already generated some really nice results according to the testimonials we've had back from our students and our traders around the world who have sent us testimonials. If you're the type of trader who likes to look for an overall uptrend and buy at lower prices in that overall uptrend, and then at the same time, in an overall downtrend, look to sell at higher prices, this is a great strategy for you. Now, let me show you a few examples here. Let's look at this older chart in Apple, okay? Obviously, in hindsight, looking back, it's been in a steady uptrend. The overall trend is up. But along that way, we've had a few sell-offs, such as here, and then here, and then here again, okay? So these would have been opportune places to buy, right at these lower levels. Well, look at the signals that this strategy generated. A buy signal here, right at the very bottom, two more here, and then one more right here. Now, had you taken that very first signal, you could have generated upwards potentially of 38 points in just 2 months. So I'm going to show you how simple but how powerful this strategy is in today's educational presentation. And as well, you're going to see how easy it is to apply this method on our platform, the PTS Primo charting platform that I developed with Pro Trader Strategies. We truly believe it's the educational platform that teaches you how to buy low and sell high. So welcome to this presentation. Once again, this is an educational presentation, and my name is Steven Primo. I'm the president and founder of Specialist Trading. And we only really have one goal in mind with our courses and with our webinars, and that's simply to educate you as traders. Most traders fail, it's our belief, because they're simply not educated enough. In other words, when you're not educated, when you really don't have a grasp of sound fundamental techniques or ideas that generate consistent results, what's the first thing you do? Well, you buy some $10,000 course that promises to never lose money, right? Or you listen to some guys on TV that are supposedly supposed to know everything, right? They've been trading for years and they know exactly what you should buy or sell. Or you go to a chat room and they tell you exactly what to buy on a nightly basis, all right? Show of hands, how many people do that on a nightly basis? Now, trust me, I'm not saying this to be, condescending or, arrogant. I used to do the same thing. When I first started trading some 42 years ago, we didn't have chat rooms, there was no internet, and we didn't have, a lot of these advanced ways of communicating, but we still had newsletters. I still was listening to people on TV. I was looking at all the, the pundits and listening to what they had to say. And none of the things that I listened to worked at all. The only things that worked and really sustained me were the things that I teach my students. I was lucky enough to have some mentors that taught me these things. And that's what I do with all my courses for all my students around the world. In over 115 countries, and in every state in the United States, I teach them the very same things that were taught to me and the same things I use in my own personal trading. So you're going to see how simple it is to buy low and sell high using this particular pullback method. But before we begin, as always, we are first required by law to share this with you. So please take a moment to view our disclaimer. As I've often stated, I'm going to be sharing with you a lot of performance results using this particular method, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also, please remember that all examples are strictly for educational purposes only. Once again, we are first and foremost an educational company. Now, as you're taking a brief moment to view the disclaimer, if you haven't done so already, we have some new students here today. I'd like to invite each and every one of you to follow us on Twitter. There's our handle right there. I post different information on a daily basis. Feel free to go to our Twitter page and check it out. I post anywhere from signals our strategies have generated to little bits of financial wisdom to help you along the way. So lots of great free educational information. So feel free to follow us on Twitter. Now, as I stated in the opening statements, we're a little bit different from other webinars you may have attended or other classes you may have attended, and that our only goal is simply to educate you. That is what is missing. That is the missing component in your trading. It's not some perfect system. It's not some perfect indicator. It's not the perfect market or time frame to trade. It's really educating yourself so that you can make your own trading decisions. You see, what my goal is to teach you, not to trade for you the way so many other websites do, where they tell you exactly where to buy, exactly where to sell, exactly what market to trade and what time frame. I mean, in my opinion, I couldn't think of a better way to make you a losing trader, because what I would be doing is basically pushing you aside, taking you out of the process and saying, just listen to me. And if that works so well, because that's the way the entire industry is based off of, then why do 85% of all traders fail? Well, it's because it doesn't work well. You should never trade the way someone else trades. In other words, two traders should never trade alike. You should follow your own risk parameters. You should follow a method that allows you to be in the trade as long as you want to or as short as you want to. This is how you become a consistent trader, not by blindly following somebody else, but by learning things that have stood the test of time and then make your own trading decisions. This is the way I was taught. This is the specialist edge, and it has sustained me now for over 4 decades, and hopefully it will be able to do the same for you. Okay, now this is a classroom. I'm going to be sharing with you this method. I'm sorry, I cannot give you all of the rules. I know a lot of you are saying, well, Steve, you didn't give us the rules to this. I can only share with you one rule, and the reason is there's only about 2 or 3 rules in this method, and if I gave you one more, you'd most likely be able to figure out. And it wouldn't be fair to our students around the world who have already purchased this. But that's okay. I just want to give you a brief overview of how this works, teach you a little bit along the way, and then share one of the rules with you, okay? All right. Now, before we begin, I know it says let's begin, but before we begin, as I always state, I like to take the questions at the end of the webinar. I don't want to stop for every slide. So if you have a question, please try to remember it or write it down. I promise I will get to it at the very end. And the only thing I will answer at this time is, yes, we record our presentation, so if you have to leave early or if you're having technical issues, don't worry, we will provide each and every one of you with a link to this recording, okay? All right, now let's begin. We're going to be talking about my premier pullback strategy number 9. Remember, it's only a year old, but it's already racked up some significant, really nice gains and really nice results as according to our testimonies that we receive on a weekly basis from our members already in the course. Now, let me give you a little bit of a refresher course about pullbacks, because even though you may be aware of what a pullback is, there are a lot of people that aren't familiar with what pullback style of trading is. So here's the way, in a generic form, the best way I can describe it. A pullback first requires for some type of overall trend. In this case, as this generic chart shows you, we're in an overall uptrend. Now, what usually happens is we go into some type of sell-off or some type of range phase, okay? We go into these brackets right here. This is where most traders say, well, we're having difficulty. This is where all the institutions are having selling pressure. This is a wave 5. This is major Fibonacci resistance. So this means that the trend is over and I should probably sell at this double top here, okay? Once again, those justifications sound familiar. This is the way we're all taught. And I used these things some 42 years ago. They don't work. So why waste your time with them, all right? Why don't we just listen to the source, which is the market itself? Pullback style of trading calls for you to buy on this little sell-off within the overall trend. Now, a sell-off just isn't enough to say, well, okay, I'm going to buy on this little sell-off. You need some other requirements that are met, and this is what comes in the course. But a pullback trader wants to buy on that little sell-off and then with the hopes of the trend resuming to the upside, where everyone else was selling, and because the institutions were there. We all know that doesn't make any difference. If the market wants to go higher, it can go through any institution, it can go through any resistance, it makes no difference. Now this can work to the downside as well. A pullback sell requires for some established trend to the downside. And then, as with all trends, we hit a little bit of noise here. We start to bounce back and forth. Most traders will say, okay, well, we're going to make a double bottom here. This is major support. This is where all the banks are buying, so I want to buy. But a pullback trader, as long as all the requirements are met, looks for that little bounce within that little bracket, and that's where they look to sell. So this is where a pullback sell would take place, all right? If a pullback sell is valid, most likely the trend resumes to the downside, and that's where you get a nice little profit, okay? So this is what we're looking for. Remember, it's not as simple as just saying, well, you have a little bounce, so I guess I should sell, right? That's what Steve says. No, you need other requirements to be met, and the good news is all those requirements are within the strategy number 9 course. All right, so some of the highlights. It's our premier pullback strategy. It's designed to trade moderate to deep pullbacks, okay? So what does that mean, a moderate to deep pullback? Well, that means if you're in an overall uptrend, the sell-off will be rather moderate or might even be rather intense, a very deep sell-off. That's where we're looking to buy, okay? If it's an overall downtrend, well, the bounce may be, upwards of a little bit moderate bounce to a real strong bounce. That's okay. As long as it meets our requirements, we're looking to sell. Now, because of this, because you're selling at higher prices and buying at lower prices, this lends itself perfectly if you're an option trader, all right? If you like to time options. Why? Because if you're looking to buy, usually within that sell-off, the cost of the premiums will really go down. So you don't have to worry about buying something that already has a very high cost to the option, all right? Now, the beauty of strategy number 9 is you can apply it to any market, any time frame, in any direction. Now, most of the slides I'm going to be sharing with you today will be in stocks, but don't worry. It absolutely makes no difference. We're really trying to share with you market behavior, and that behavior can be found in commodities, can be found in futures, currency pairs, Bitcoin, all right? Makes absolutely no difference. It just doesn't have to be stocks, all right? Now, with all our strategies, if you decide to become a member, we always tell our students, please do not immediately start trading. Paper trade first. There is so much you learn from this process. Right now, I mean, I still paper trade. I've paper traded upwards of 6 months at a time. Okay, all the new strategies we have, we always paper trade first. So that's what we ask our students to do. We don't want you to jump in and go into a losing scenario because you're not implementing the rules correctly. In order to implement the rules, you need to first understand the full process, and you can do that through paper trading. Now, our edge, as with all of our strategies and methods, our edge with strategy number 9 is its consistency. Consistency doesn't mean that it will have total winners all the time. Consistency means an awareness that you will have a loss every once in a while. It's the exact opposite of what most students think. You will have a loss. That's okay. But what matters is a strategy that's consistent enough to recoup that loss. So strategy number 9 is a very consistent method in that category. All right. So let's go further into what strategy number 9 is. It employs 2 simple requirements. Their relationship to price automatically generates the signals, okay? So it's the relationship between these 2 requirements that generates the signals. Now, in an overall uptrend, as we showed you earlier, buy signals will be generated during a decline. In an overall downtrend, when price is going lower, sell signals will be generated during a rally, okay? This is what we mean by it may be perfect for option timing because you'll be able to purchase these calls or puts at a lower price. All right, so let's look at some recent strategy 9 examples, and let me share with you one of the rules which is also applying to one of the indicators that is used, and that is our 50-period moving average. We call this the buy-sell line. Now, what does that mean? Well, it means that with any market, whatever we're trading, could be a 5-minute chart of the E-mini futures, could be a weekly chart of Apple, it could be a monthly chart of Bitcoin. It makes absolutely no difference. You must have a 50-period moving average applied. That's our buy-sell line. And the reason why we call that is because if price is above, that means you're only looking at the market with a buyer's bias. All right, you're only looking for buy signals. We will never sell above the 50-period moving average. Even if all the rules are met using strategy number 9, if price is above the 50, it must be a buy setup. And the same goes for sell setups. We must be below the 50. Now, many times you'll see a couple of bars below the 50 period and then one bar bounces above. That's still okay. If that last bar that bounces above and closes above the 50 generates a strategy number 9 buy signal, that's still valid. It's a little bit more aggressive, but it's still valid, okay? All right, and remember, we're going to show you all these displays now. All these chart displays have been generated on our PTS Primo charting platform. I'm going to show you the process going through with our platform and show you how simple it is to trade pullbacks on our platform. Okay, so let's look at this older example in Tesla, okay? This is in September coming into October of last month. We see here that even just off this minimal amount of bars here, the market's in an uptrend, right? We're steadily heading upwards. So you would think it's okay, you know, it's going upwards. And then this happens, all right? So you say to yourself, wait a minute, we broke that nice little, uptrend signal there. So it looks like we're broken down. I don't want to touch this with a 10-foot pole. In fact, I may be a seller of Tesla. Well, first thing we do, remember, is we punch up the buy-sell line. That tells us whether we're buyers or sellers. Not if there's a breakdown of a trend line. That's silly. There's no consistency in that either. I used that once again when I first started trading. So let's let the market tell us. All right, we apply the buy-sell line on our platform. Now here are the 4 different categories for applying. Let's use the simplest, which is the 50-period simple moving average. And as we can see, The majority of bars are above. We went below intrabar but closed above, just what I was telling you earlier. Okay, so that's still a valid sign telling you that the market's in an overall uptrend. Doesn't mean that it's going to go up. Doesn't mean that you buy at the market. That's just the first requirement. Excuse me. Now, we teach you the rules of what constitutes a strategy number 9 signal in our online course, all right? So you have to learn how to identify this on your own. But in order to check your work, because trust me, I'm not going to be there with you every day, every hour of the day to check with you to see if you're online, making sure that you know how to properly identify a signal. So what we've done is we've made it simple on our platform. All you have to do to check your work to see if you're right is to click on strategy number 9, click on signal arrow right here in the drop-down menu, and you can see that there was a buy signal. So if you had thought that there was a buy signal there, you are correct. This is how you check your work. This is how you learn how to properly identify these so that ultimately you don't need this tool anymore of the up and down arrows. Remember, our goal is to have you make your own decisions by not relying on anyone or anything else. Now, it doesn't matter if that is some person on TV or some platform generating buy and sell arrows. You don't want to rely on those. You want to be able to generate your own setups based on what you've learned, okay? Remember, education is the source we supply all of our students. So that's a valid buy signal. You have the choice to go long that. Remember, this is not a system which requires you to go long. You have the choice, but it would have been a good choice because in the next week or so, Tesla went up 25 points coming into mid to end of October. All right. Let's look at YNDX, all right? This is a tough one if we're using the standard judgments for deciding what a market's going to do, because after all, we've all been taught that that's support, right? We came down, we made a bottom here, and we're starting to go higher. And in order to check, see if that's really support, what is the market telling us? We don't care about what the institutions are doing, what the volume is doing. That's silly. What is the market telling us? Well, the way to find out what the market is doing is by adding the buy-sell line. Click on the buy-sell line tab, click on 50-period moving average, and there's no support there. The overall trend is down because price is below the 50. So sure, you may have a nice bounce for a week, but that's a selling opportunity. That is not a buying opportunity. All this is a pullback in an overall downtrend. Okay, this is the bounce, this is the moderate bounce we're looking for to sell. Now remember, we teach you the rules of how to identify a setup. Let's say that you think you spot and identify a valid setup here. Well, how do we check to make sure? Because we think it's a pullback and we think that the requirements have been met. Let's click on strategy number 9, click on signal arrows, and guess what? We not only identified one, but there's actually 2. So we have 2 chances to go short. Remember, how you enter a trade is entirely up to you. We're not here to tell you how to trade. We're here to teach you high probability setups. If you want to trade and actually short the stock, you can do that if you have a big enough account. If you want to just buy the puts, you can do that. If, let's say, you're long. A lot of our students say, wow, I was long this, and I'm using these sell signals to exit my long position. You can do that as well, okay? Either way, it was a smart decision because the stock fell 7 points in the next day, all right? Did we know it was going to gap down like that? Absolutely not. When someone would say, well, how did you know to go short? Because the market told us. All right, here's an example in ZTS. Once again, this is obvious downtrend, right? We can't buy this. It's going straight down. Well, if we apply the 50-period moving average, sure, we're going down, but it's a sell-off in an overall uptrend because price is above. And there are 3 buy signals here. This is what we call a cluster, all right? A very positive sign. The stock went up 8 points in the next couple of weeks or following month. How about here, Urban, all right? URBN. We have a sell-off here, followed by another one here. Here is a moderate pullback. Here is a deep pullback. Why are they pullbacks? Why are they not sell-offs? Because we're above the 50. Even though we had one day closing below, we immediately bounced back above. Now, on this little sell-off right here, did all the requirements come to play? Were they all met? Yes, they were. That was a buy signal. And look what happened after that. You had a nice little gain of 5 points in the next week or so. Now, you could have used any one of our number of exit signals which we provide in the course to get out, and then look for another pullback as we have here. This is a deeper pullback. Look for a buy signal, 2 of them right here, and another 5 points. So potentially you could have captured upwards of 10 points on this particular trade. Let's look at Netflix, an older chart in Netflix this last summer. Someone looking and say, well, Steve, we made a bottom here. There was some really good news and we started to bounce. I really like Netflix. I mean, look at the chart. It's been going up for so long. Well, what happened after that? Okay. Remember, the first thing you want to do is find out what the market is telling you. Forget about the earnings. Forget about support and resistance. Forget about some guy on TV. Forget about a chat room. I've done all that hard work for you before. It doesn't matter. It doesn't work. So I've done that. I've taken the losses for you. Trust me. So don't waste your time and mostly your hard-earned money wasting your time on things like this. The consistency comes in listening to the market, not in outside sources. So what is the market telling us? Well, we have to apply the buy-sell line first. And the buy-sell line was telling us way in advance that this is in an overall downtrend. There's no reason to even think about buying this. So if it's in an overall downtrend, we want to be a seller. And we want to be a seller on these bounces. All right? Well, look at the bounces. There was a bounce right here. You would have sold right at the top. You could have taken advantage of this all the way down to 83 points. Or if you missed that one, take advantage of this sell-off for about 30 or 40 points. To see how the odds are in your favor when you are in sync with the overall trend. All right, let's look at PEP. All right? I want to talk about consistency here. We are following all the rules. We're above the 50. We meet all the requirements. A valid buy signal is generated. So we go long, and then we immediately lose, right? This is where students right now are ready to, drop me an email and say what a fraud I am and how nothing I have works and everything I have is just losing. And I've gotten those before, and they say, listen, remember we say about consistency. Consistency means an awareness that there will be losses from time to time. There's nothing wrong with that. Now, what most traders like to do, though, is the minute they take a loss, they go and sulk, and they go and complain, and they want to play the victim game and the victim card, and then move on to something else. But as a consistent trader, you have to be diligent and look for the next signal, because many times the very next signal will be able to recoup that loss. All right, so let's say your stop had been here. Let's say you used one of our generic stops and you lost 3 points. Well, if you just walked away and threw this course out the window, you would have missed another sell signal right here, or another signal. This one was a sell. And potentially you could have been able to recoup that 3 points and made another 5 potentially if you stayed in long enough. This is what we mean by consistency. I know I've gone to webinars before, and I know some of these guys only show trades that are tons of winners. And we have tons of winners too, but we also have losses, and we're not afraid to mention that. Every good method has losses from time to time. That's okay. You want to be able to recoup those losses. All right, here's the original example we share with you, an older example in Apple coming into October, mid to end of October. How could we have taken advantage right here of all these sell-offs? Well, we first add the buy-sell line, and as we can see, even though we had 2 closes below, 1, 2, the next bar closed above. All right, we had 1 closed below, and then the remaining bars were above, and then this was obviously above. Now, look at the signals. The signals were all generated. This first one was closing above. These 2 were closing above, and these were above. Had you taken the very first one, potentially you could have captured 38 points coming into mid last month. How about TA? Okay, obviously in hindsight, someone say, well, Steve, yeah, I mean, obviously this is in a downtrend, but I would want to know somewhere around here that we were in a downtrend. When we were going sideways, how come somebody didn't tell me? That website I go to in that chat room says that this was major support. This was a double bottom where all the institutions and banks were buying. So I bought right here, and look what happened after that. I want somebody to be able to tell me that we were in a downtrend. Well, I'm not going to tell you we're in a downtrend. The market will tell you if it's in a downtrend or not. All you have to do is apply the 50-period moving average and then apply strategy number 9. And guess what? Was the market telling you it wanted to go higher? Even though you had maybe 1 bar closing above, and then you had 1, 2, 3 above, you need at least 3 to 5 consecutive bars above to tell you that the trend has changed, okay? And even that, even when you had 3 closing above, there were no signals generated. The sell signals were generated way in advance, and if you missed those, guess what? You had a number of ones following that. All right, let's look at letter G, all right? Now, obviously, someone would say, this is in a downtrend, Steve. Look at this. We're rolling over. And on top of that, we have a bearish engulfing pattern. I took that $5,000 candlestick course, and this is a very negative sign. We have one here. We have another one following that, I mean, this is just a really bad sign. This is a bearish engulfing pattern. Well, if we add the 50, we don't care. The overall trend is up. We have one bar closing below, and this bar closed just above. It's hard to make out, but we closed above. And on top of that, this is a buying advantage. This is a pullback in an overall uptrend, not to be looked at as a downtrend, but to be looked at as a point of reference to a seller's bias, or I should say a buyer's bias. So if we apply the rules, we actually generated a buy signal and 8 points in the next 2 days, all right? So how well did that sell off in that, bearish engulfing pattern work? Remember, that's supposed to tell you that a nice sustained trend is in place. It only lasted for about 3 bars. Here's another example. Someone looking at this will say, Steve, it's really hard to tell. We're kind of in a whipsaw market. This is major support according to that $10,000 course I took online on the banks and on the institutions. So I think actually we're going to be going higher. We're in an uptrend. So, okay, I'm positive about this. I think I'll look for some type of buy setup, all right? Does that sound familiar? Is that the way you make your trading decisions? It's the way I used to make my trading decisions. And my first year in trading on the floor of the Pacific Stock Exchange, I thought I was going to get fired because nothing was working. I couldn't make any money using those same justifications. It wasn't until I was able to apply the 50 period that I saw why I was losing so much money. It was because I was out of sync with the overall trend. Even though on the short term it looked like I should be a buyer, it should rather be looked upon as a selling opportunity as opposed to a buying opportunity. So this wasn't an uptrend. This was really just a pullback. That means that that's a selling opportunity. So as I look here, look at all the sell signals that were generated. Now, obviously, these two didn't work out well. You wouldn't have done very well on a 1 day, so most likely you would have lost money. But had you been diligent and got back in either of these, you think you could have made back the first losses in the first couple of trades? This is the beauty of being in sync with the market and then using one of our premier pullback strategies, strategy number 9. Now, let's look at some different time frames in different markets because we know that not all of you trade daily bars of stocks. So let's look at a weekly time frame. This is an RGLD, all right? Now, obviously, this is in a downtrend, right? We've topped out. We've made some type of top here. We're going lower, but that's the way you were previously taught. What I teach you is to look at the 50-period moving average. You can start doing that right now. In fact, I would suggest all of you go back and look at your last 10 to 20 trades and apply the 50-period moving average. I can almost guarantee you that most likely you lost money. You had losing trades because you were out of sync with the buy-sell line, the 50-period moving average. This means you were shorting above the 50 and buying below the 50. Now, as we apply it here to RGLD, the same process. It makes no difference just because it's a weekly chart. We have the 50-period moving average, and guess what? We've had 2 closes above and then followed by 1 back up above. 2 closes below, I should say, 1 back up above. Remember, we need 3 to 5 closes below to tell us that the overall trend is down. This is not enough. And on top of that, we think there's a buy signal. So we check our work, click on strategy number 9, and yes, we actually had 1 buy signal here and another one here. Obviously, this one would have worked out well, but if you've been diligent and taken the second one, well, you think you could have made back that initial loss, maybe of 5 or 10 points. That's 54 points coming into September and October of this year. How about a weekly chart of OI, okay? Let's see how most traders previous to this webinar would have analyzed this. They said, well, Steve, this is a bullish engulfing pattern. Look at, we came right to the bottom of that downtrend. That is a reversal pattern. I've always been taught that bullish engulfing patterns are reversal. And look what happened. We've started to head higher, okay? Here's another one. We have 2 bullish engulfing patterns. This is an extremely strong case for an uptrending market. So we've got an uptrend here. I'm going to look to buy, all right? Or let's say if we're already long, I'm not going to get out. In fact, I may even buy some more shares, okay? Does this sound familiar to anybody? Is this the way you make your trading decisions? What do I teach in my courses? We want to add the buy-sell line. And what is the buy-sell line telling us? It's telling us we've been in an overall downtrend for the past, 2 months. And this uptrend, the so-called uptrend, is actually not an uptrend. It's a pullback. It's a bounce in an overall downtrend. So what is that? That's the definition of a selling opportunity. Now, if all the other requirements are met, we can go short. So we've been taking the course, we've studied the rules, and this actually looks like we have a setup here to go short. We want to check our work. We click on strategy 9. Click on signal arrow, and we're right. There's a valid sell signal. So we decide to sell. Maybe we buy the puts, 9 points, okay? Now let's say you were long. You think you would have liked taking a 9-point loss in the next, couple of months? Let's say you had bought thousands and thousands of shares. How would that have worked, okay? All right, let's look at another market, entirely different market. Let's look at the euro yen. This is a daily chart coming into October last month. Obviously, we've been in a downtrend, but that's in hindsight. Could we have known that in advance? Sure. This is where we want to go short. So how can we have known to go short and that we were in an overall downtrend? First thing we do is apply the 50-period moving average. We see that we were never above. And the second thing is apply strategy number 9. Look at the sell signals right at the top. And if you missed that for 270 pips, well, you could have taken this one for 185 pips, okay? That's a daily chart of the euro coming into October last month. How about a 15-minute chart of the E-mini, the middle of last month, October, okay? Once again, we're in hindsight. Most traders would say, well, yeah, in hindsight, this has been going straight up, but I would have liked to have known in advance. Well, we apply the 50-period moving average, and we knew well in advance, way down here, that we had consecutive closes above. Do you see how simple trading is? You don't have to overcomplicate it by taking some $10,000 course to find out what to do. I'm giving you a free tool right here that you can use on any platform, any time frame. Here's a 15-minute chart of the E-mini that you would have known in advance that you should only be looking at this from a buying point of view. Now look at all the selling. There were sell-offs here, a sell-off here, a sell-off here. Those are all pullbacks in the uptrend. How could we have taken advantage and bought the E-mini at lower prices? Well, look at strategy number 9. The setups all right here, all during this sell-off, all at this sell-off. Some better than others, but obviously some really nice opportunities. Had you taken these very first ones right here in the mid-October, that's 80 points or $4,000 potentially you could have captured per one contract. Okay, so let's review, all right? Strategy number 9 is a moderate to deep pullback strategy, all right? Remember, a moderate pullback, let's say you're in an overall uptrend, well, that's a moderate sell-off. A deep pullback is a deep sell-off. This means you'll be able to buy prices you'll be able to buy whatever market you're trading at a lower deep price, okay? Now, it's designed to trade these pullbacks with 2 simple indicators. Guess what? I shared one of them with you. Now, buying lower and selling higher helps option trading. So if you're an option trader, this may be a great method for you. We have numerous traders around the world who actually trade this method with options. The beauty of this is you can apply it to any market, any time frame, and any direction. I already shared stock examples, weekly chart examples, intraday E-mini examples, and daily bars of currency pairs. You can also trade it on commodities. You can also trade it on Bitcoin. It makes no difference on ETFs, okay? Remember, though, if you decide to become a student of mine and become a member of this course, remember you must paper trade first. This is a requirement. We do not want anyone jumping in with 2 feet first and then going through a series of losses and saying, I want a refund. This stuff doesn't work, because I can always say 9 times out of 10, I get the snapshots from the students and I look at their work and I realize that they're implementing the rules incorrectly. Almost all the rules are always wrong. It's because you jump in too quickly. So you must paper trade to fully understand the process. Our edge here with strategy number 9 is its consistency. I showed you a number of examples where there were losses, but on the very next trade setup, it was able to recoup those losses, okay? So this is what happens, not guaranteed, but a lot of the time you were able to recoup the loss. This is what we mean by having a consistent method. Trust me, consistency is what sustains you. Not some fly-by-night system that you spend $10,000 for and has a couple of great winning trades and you say to yourself, wow, I'm going to retire in the next couple of months. And then it gives it all back on the next trade, okay? We've all been there. I'm embarrassed to mention how much money, when I first started trading, I spent on these fly-by-night systems that maybe gave me 1 or 2 good trades and then took me into a overall long, sustained drawdown where I gave everything back. So you don't want to be trading something like that. That's not a consistent method. A consistent method has a 2-step forward, 1-step back approach. The 1 step back, meaning that we are aware we will have losses. The 2 steps, meaning that you're able to recoup those losses, okay? That's what you want to be looking for in a method. Trust me, you owe it to yourself to complete 2019 in the right direction. I know most of you had all these hopes and dreams this same time last year thinking, you know what? 2018 has been terrible. I haven't been able to do much. I'm going to really make 2019 my year to be successful. And you're probably most likely right where you were in 2018. You owe it to yourself to start out 2020 in the right direction. I really think we can help you with that. We have a great attendee offer for all of you taking time out of your Wednesday today. We're going to offer you a great discount on strategy number 9. We're going to also include the PTS Primo charting platform, okay? So you're going to get detailed video course instruction. Now, we didn't talk about exact entry points, exact exits, and we didn't talk about stop placement, okay? These are all included in the course. In fact, each and every one of these categories comes up with upwards of 5 to 7 different exits, entries, and stop placement. So you have your pick of the litter to choose from. This is what we mean by you deciding how you want to trade. We provide you with the information, but you work with what's best for you. And the reason why we do that is because everyone should trade differently. No two traders should trade alike. So therefore, we provide you with an entry which has very little minimal risk, if you like, and we provide others with an entry that says, listen, I don't mind taking the risk, I just need to get in really quickly, all right? So everyone should trade according to their own parameters and their own persona, okay? Now, you're also going to get 1 year of the PTS Primo charting platform. This is a nearly $1,800 value. This includes our scanner. So let me share with you what's included in this great offer we have for you today, all right? As we stated, we're going to give you the platform that really scans for pullback strategy 9 signals. So it takes all the hard work out of it for you. Because literally some nights there are dozens of strategy 9 signals being generated. Let me show you how simple it is on our scanner to generate some of these setups. Once you click on the strategy number 9 green tab, as you see right here, you'll get the drop-down menu as we showed you earlier. You just click on scanner and this page will appear. Click on scan after you've loaded whatever symbol list you're interested in. We provide that for you as well. And you'll see a series of green and red horizontal bars. The green bars mean there's a buy signal in the corresponding stock. The red bars means there's a sell signal. And as I stated earlier, some nights you may get dozens, if not hundreds of these, depending on which market you're scanning, all right? And this whole process takes less than 2 minutes. It's so simple to do. So in about 5 minutes, you can decide for yourself what you want to be trading the next day. Now, let me share with you some of the students that shared with us some of the scans that really generated some nice trades for them. For example, this is one in Costco. This was in beginning of October last month. Once again, most students would say, well, Steve, this is in a downtrend. Obviously, we're going lower. We have lower lows and lower highs. And we have a bearish engulfing pattern right here, and followed by another bearish engulfing pattern. So looking at traditional and conventional wisdom, we have to sell this, or at least not trade it because it's going lower, right? This is the way we've all been taught. Well, what have I taught you today? The first thing you want to do is apply the buy-sell line. And what is the buy-sell line telling you? It's not telling you that this is going lower. It's telling you that in an overall uptrend, this is just a pullback. So that's actually a buying opportunity. Now, if you've studied the course, you've paper traded enough, and you understand what the rules are, you would have seen that a signal was generated on the 2nd to go long Costco. Now, this was also scanned for on our scanner. And look what happened. The stock went up 15 points in the following week, coming into the middle of October. Let's look at another scan, all right? This was in PAGS. Now, before you scanned, you would have looked at this and said, well, we're in an uptrend. Higher highs, higher lows. Are we in an uptrend, though? We're just in a bounce in an overall downtrend. This is a selling opportunity. So you would have scanned for this, and you've seen that the scan came up with a sell in mid-October, just last month, and 10-point drop in 1 day, okay? Could have scanned for this. Now, let's say I had given this presentation a week or so ago, okay? Let's say I'd given it just the beginning of the week, and you decided to become a course member. You could have scanned for MDCO. As we can see, this looks like we're in a downtrend, right? If you apply the 50-period moving average, you see we have one close below, intraday bar on the 15th, we went below and then immediately closed above. Looked like one tick above, but that's enough, all right? So this is not a downtrend. This is a sell-off or a pullback in an overall uptrend. Now, if you had scanned on the night of the 15th or 5 minutes before the close of the 15th, you would have seen that that was a valid buy signal using strategy number 9. All right, so you could have had a choice to buy the stock, or perhaps you would have bought the calls. Either way would have been a wise choice. The stock went up 22 points in 2 days. Our students are always fascinated. They go, Steve, how'd you know that? How'd you know that announcement was going to come out which caused the stock to gap up like that? We don't know. And they say, well, I don't understand. How can you figure this out? It's because the market tells us everything we need to know. Our philosophy is you don't need to overcomplicate your trading by looking at all these things that you were taught years ago that are supposed to work, right? Well, ask yourself, how well are they working for you? Most likely, if they were really working that great, you wouldn't be here. But the fact is that they're not working. And take it from someone who knows. I was using almost the same exact things that you're using over 4 decades ago. And they didn't work for me then. So they're most likely not about to start miraculously working today. Why not stick with things that have shown true consistency over time? This is the only thing we teach, and it's extremely simple. It's a lot simpler than trying to figure out what an earnings estimate is going to be, than trying to figure out what the institutions are going to do, than trying to figure out what some convoluted indicator that you have no idea what it's based off is telling you what to do. Why not just look at the 50-period moving average and a few simple rules, and you can be in line with what the market wants to do on a consistent basis, okay? This was actually happening the 15th, which was last Friday. Okay. 2019 is almost over. We have just a little over a month. Trust me, a year from today, you will have wished you became a member of this course. Why waste your time and your hard-earned money on things that show no levels of consistency? We have a great offer for you today, okay? We want you to become a member of this premier pullback strategy, and we're going to give you a really special discount. All right, let's break this down. Normally, strategy number 9, along with the platform, would cost close to $47.35, okay, or $4,800. We're not going to charge you that. We're going to discount for down to $29.95, and on top of that, you're going to be able to have payment plans, okay? So you're going to save over $1,700 on this discount. But trust me, we know that not everyone can come up with $29.95, so don't worry. You can still contact Pro Trader Strategies and put together a payment plan, okay, generate a payment plan. So for a small deposit, you can still be up and running. You're going to get a full year of the platform, which automatically generates these signals, teaches you what to look for, along with the course, which is yours for life. So this is a great offer. It's a great opportunity to get going in the right direction, okay? Here's how to take advantage of this. Contact Pro Trader Strategies. I developed the platform with them. They're in charge of all the discounts and pricing of all my courses. You can email them there at trading@protraderstrategies.com. But I would suggest, if you really want to put together a payment plan and be one of the first to take advantage of this at the end of the year with this great discount, call them directly at 310-598-6677. And they have trading consultants manning the phones. They would be more than happy to answer any question that you have. No obligation. You don't have to sign up for anything. They would be happy to put a payment plan together with you and then let you decide if you want to do that, okay? Now, the link you see at the very bottom is not a live link. It's take you to the sign up page, and there's more information on that. But you can copy and paste that onto a browser. It's a lot simpler if you go to the chat box on the GoToWebinar column on the far right. Under the chat box, they have posted a live link. So all you have to do is click that on, and that sign-up page will appear, and that info page will appear, okay? I promised you I'd reserve the last portion of today's presentation to answer any questions. So if you do have questions, once again, now is the time. Just go to the question and answer box and type them in, and I will be happy to answer them, okay? Question, I think this question was written before I showed the example. It says, Steve, does this work on intraday trading? Yes, it does. If you recall, I shared with you a 15-minute chart of the E-mini futures. Remember, and to be honest with you, full disclosure, I use this with intraday trading because I mainly intraday trade because of my schedule and because of the time I have to trade. With giving webinars like this and teaching students, I really don't have a lot of time these days to look at markets. So what I do usually is, when I have a chance, is intraday trade the E-mini futures. And yes, it can be applied to intraday trading of stocks, futures, currency pairs. It's a great, great method, okay? So it makes no difference, as we stated earlier, any market, any time frame, and any direction, okay? Someone is asking, Steve, with the platform, do I need to have certain requirements for that? Oh, no. And also, once again, this is the platform. Pro Trader Strategies handles all the tech support, so that'll probably be a better question for them. And there's no obligation, but they have such a great tech support department. They would be happy to answer any questions you have if you're wondering about the requirements for your computer and what you need. I know a lot of people have Apple computers. Yes, you can apply it to Apple with a few minor changes, but yes, you can apply it to that. But I would contact Pro Trader Strategies because they're in charge of all tech support and all of that kind of information, okay? I guess lastly, that's it. If there are no further questions, I think someone's asking about a payment plan, which I can't go into detail about that. Someone's asking about a payment plan. Remember, that's something you would have to put together with Pro Trader Strategies since they were in charge of all the discounts and the pricing models. But they would be more than happy to construct a payment plan with you so that you don't have to come up with $29.95. For a small deposit, you can still be up and running as early as today. And you can be a student of mine. Oh, one last thing I didn't mention. Once you become a student of mine, you get my private email address and you can contact me whenever you'd like. It can be in the middle of the night. I know we have a lot of students in Europe, a lot of students overseas. We have other students, that are across the country. We also have students that like to email me over the weekends. It makes no difference. I will answer your email as soon as possible. So yes, you will get my personal email, and I will be your personal mentor there to answer your questions. So that's also coming with the package. Someone there who's been trading, who actually trades this method, who can answer any question you may have, okay? So there's so much offered in this. Remember, we're almost going to start 2020. You don't want to be in the same place a year from where you are right now. Take advantage of this great offer, and you owe it to yourself to really invest in this and invest in yourself for 2020. And I'll be there with you every step of the way, okay? Contact Pro Trader Strategies. There's absolutely no obligation. I would really highly recommend calling them at the number there, 310-598-6677. There's absolutely no obligation. They would be more than happy to answer any questions concerning pricing and putting together a payment plan. Okay, so as we close, I just want to say thanks so much for attending. As you take one last look at our disclaimer, I hope you learned a little bit today about what we do and our philosophy, most especially how to determine the overall trend. Go back and do the research. I can almost agree with all of you that you really like that and that could really help you. Well, there are so much more trading techniques and examples included in the Strategy Number 9 course that can really take your trading to the next level. I look forward to all of you becoming students of mine in the Strategy Number 9 course. Thank you so much for attending. I'll see you next time. Bye-bye.